Greetings, greetings, greetings. You are now tuned into the Vault. Trust Christian, own nothing, control everything. Just want to thank you for tuning in live, listen, replay. Always appreciate everybody that tunes in live, listens in the replay. Appreciate everybody. Feel free to type into the chat even as you listen in the replay where you're listening live from. Always appreciate everybody that types into the chat where you're listening from, where you're listening to replay live or in the replay. Always appreciate it. This episode is the Vault episode 321, private trust banking options. Always appreciate that. So, we're definitely going to do that episode today, definitely by request. Bunch of trustees, consultations throughout the years, people that have contacted the Vault have run into this roadblock of quote unquote banking options. So, we're going to talk about it today. Once again, trust Christian, not to control everything. This is the Vault. Always appreciate everybody. Appreciate Mississippi for tuning in live, listening to replay. Shout out to Mississippi for tuning in live, listening to replay. Always appreciate you. So we got private trust banking options. This is an episode where we have to always say that trustee training is where you get the most out of how to communicate with bankers. Clearly, you're going into a bank for whether it's private trust because private trust can own companies in the public. It may have some type of distribution or something of that nature. So when you talk about the company having a bank account, we're talking about private trust as opposed to public trust, which is so interesting because public banks deal with private trust, or there's private sides to public banks. When we talk about the private side, most people don't know what the private side looks like. It usually looks like the wealth management side, the high net worth investor side, the asset management side. These are the names that they usually call it on the private side. So when we see these organizations, what we call private institutions, because they're public institutions and private institutions that manage money. When we're talking about private institutions managing money, we're talking about high net worth investor, accredited investor, these types sophisticated investor. These are people that are showing over $250,000 on the books. That's the bottom line. These are things that are recorded with the bank. The bank can see this, they can see this, the bank sees this for a 1 year, or 2 year, or 3 year. They've changed rules for accredited investor to acknowledge more people into the accredited investor status. The accredited investor environment allows people to be in a different investment pool, have different investment options, have access to private investments, private placement memorandums, things that wouldn't traditionally be offered to them on the public side if they were not in that particular position of managing $250,000. So we're talking about people going from zero to $250,000. That can be done within a year. Once you've gone from zero to a $250,000, you'd hold that, sustain that, and grow for 2 to 3 to 4, past 3 years. And then they're talking about, maybe they add on additional stipulations such as having $1 million outside of personal property, things like that. Because the account, the portfolio, the $250,000 can be looked at as actually the $250,000 can be looked at as an asset, a part of the $1 million outside of someone's residence. So that portfolio, which you're looking to be growing in the next 2 to 3 years, you want to grow from $250,000 to $1 million in the portfolio. In turn, that will put a person in a position where they will have $1 million valuation in assets on the books with a broker, essentially a accredited investor. At that point, you're able to get private banking options, the options where you're dealing with specific types of brokers on the private side. When we're talking about portfolio management money, then at that point you become a little bit better lendable. You're in a better lendable position once you have your account past $250,000 with the brokers. But let's move into outside of just being in the trader perspective. We'll talk about it from the trustee perspective. The trustee perspective from private trust banking options. Yeah, a lot of people say, "Oh, well, I got to go into the basic bank in the beginning, trust Christian, but I can't go to I can't go to all banks because not all banks are friendly towards private trust, and that's very much so the case. So the banking options are traditionally not going to be credit unions. A lot of people come, and they say, "Oh, I'm gonna go to the local, credit union to take it easy." you know. And it's well, the local credit union dealing with community money. They're not dealing with institutional money. When we talk about institutional money, we're talking about private money. These are people that are putting their money up as collateral, as loans to give you money on margin, to give you a spread, to give you leverage. That's how it works. Isn't the rule use other people's money? It doesn't change in private trusteeship. It just, how are you leveraging yourself? How are you leveraging business? How are things being leveraged? Private trust banking option says, well, you're in the private now. So no, you're not dealing with the local community bank. You're dealing with international institutions. Not every institution is international. Some institutions are public and still not international. Some institutions are international and not public. There's you going in and interviewing the banks. Shout out to the Bronx. Appreciate the Bronx for tuning in live, listening to replay. Appreciate the Bronx for tuning in live, listening to replay. Private trust banking option says we know we're not doing the local. We're going to focus on international because when you're in the private capacity, you're in the international capacity. And by you being in that capacity, you're focused on making sure that you have leverage and you have in and out the flexibility to move around as a trustee. Um, so when we're talking about that having leverage, being with an institution. So the reason why we even wanted to do this episode today, because we got a story that literally just came in from a trustee about, someone that they turned on to the private trust banking option situation. And what happened was that because this public person came from the public and they have millions of dollars in the public, their advisors were on the public side. So when they found out about the private trust banking options, they faced it with optimism and hope. The particular individual that made all the money, but their advisors started advising about the things in the public capacity. So in turn, what was actually strategically structured and managed going into a private capacity because they were in a position where they were looking to be fully vetted into private trust banking options. They literally got cold feet, jumped in head first, and now they jumped out, and now they're back into the public. And what do you think this is? What do you think separates a trustee that goes with the public banking with the private trust banking? Or they go with the private trust banking options where you have to go and you have to get the money to where you're able to be into the private institutions where privacy is valued. High net worth investors are very much so in those positions. But we see that because people come from the public, they may face things with some level of fear or resentment. And in turn, or apprehension. And in turn, by coming to private trust banking options with those type of thought processes, it'll literally scare you out of thousands, millions of dollars. Easy. It'll just scare you out because the leverage that is given to you in the private capacity is not going to be matched in the public. Period. So when we talk about private trust banking options, some people say, well, what private banks are we looking? Ladies and gentlemen, you can Google high net worth investor banking options. That's the private side of the bank. It's made for people to have the capital. We explain that there is a financial threshold. So people say, "Oh, but then recently we heard some people say, well, I'm not at $250,000. What am I supposed to do?" Well, ladies and gentlemen, we don't exclude people out of trusteeship because you still got to manage 0 to 1/4 of a million, and you still have to manage 1/4 of a million and beyond. So there's a management course for those people. That's what trustee training is. It's a management course. It's to manage the 0 to 1/4 of a million. This is not hard. 1/4 of a million for anybody that's over 25 years old in the United States is moving behind at this point because there's